Hello traders out there in trader land. The markets look grim. I'm telling you, does not look good at all. Spider was down almost 2%. The diamonds were down negative territory, but the NASDAQ was down nearly 5% for the week. Russell's 2000 down almost 3%. Financials, though, on the other hand, was up over 5%, 5.5%. So overall, the markets as a whole, down, down, down. Financials up, up, up. We'll be talking about this. The first thing I want to do is look at the weekly chart on the S&P 500 ETF. Called the Spider SPY. Anybody can get this. It gives us daily or volume ticks, so you can trade intraday on these, and you get volume, which is very, very nice. And that's why I like to look at these ETFs. Spider, here's the danger zone. I'm telling you guys right now, out of the gates, if this Spider breaks those two trend lines, okay, we are in desperate, dire trouble in the markets. I do not say that lightly. If you go over here to the diamonds, if we come down and break these trend lines, these three trend lines, dire, big time, major, we have set the top for the markets. If these happen, the top is in before a monster retraction, a big market correction happening in the markets. If you look here at the tech stocks, the Qs, already broke the trend lines. Bad news, and happened on monster volume. That is bad. Anytime techs and financials will lead the markets, financials and small caps will lead the markets, but the techs are close behind leading the market. The techs are showing significant sell pressure. That is no good what we're seeing here. The only way to heal itself, and it can heal itself, is if we have a monster week next week. If next week we go screaming northbound, it will take that to heal this market, because if the weekly chart stays broken like it is right now in the Qs, expect the rest of the markets to fall out of bed. Russell's 2000 drop, broke a major trend line. That major trend line acted as resistance, and we're dropping into the abyss. Guys, a lot of downside opportunity here on small caps. If small caps drop and techs drop, I'm telling you right now, spiders, the S&P 500, and the big Dow, the big blue chip 30 will drop right behind it. So we are seeing bad damage in the markets. I mean, we saw this tie. I mean, the high in the Russells could be in. This could be the high, guys. If this doesn't correct itself soon, the high will have been put in with a close. I mean, we did get a high. This was November 8th, 2021. Is that going to be our high? It could be our high, guys. And the markets are going down. You're hearing it here at Grok Trade. So, but the financials, here's the thing that says, hold on, man. The Fed's coming screaming in, propping up this market, trying to keep this market from crashing and burning. They are doing everything in their power to help this market right now. And that's why we have a 5.5% rally on the banks. This is unbelievably nice, pop to the upside. Here's the problem: big rising wedge. The rising wedge is more bearish than it is bullish. We have a bearish divergence on the major oscillators here, guys. No good at all on the big time frame. This bounce is a gift at best. At best. Learn all these patterns and how to trade them. Next weekend, we do have a mentorship. Join us Saturday, Sunday, and Monday. Join us next weekend. No. Maybe one person. We might be able to get one person in next week. We're full. We may have to get you in February, okay? But we might be able to get you in next weekend. One person, not two. Okay. Sorry, Mark. I know I wasn't supposed to say that. Mark's teaching. Mark's a meerkat. One of the only people in the world I would let trade my own money. So here's the deal. If I want to show you something, I'm going to go into teaching mode here, okay? I'm going to teach you something that is a very exotic candlestick pattern. You can look it up yourself. But if you look here, this is the spiders, okay? Spiders are a major support line on the daily. That needs to bounce in soon. The financial says, hey, we got a good chance of bouncing, but the Russell's 2000 says there's no way we're bouncing, and the NASDAQ is saying no way we're bouncing. This is a do or die situation that we're in right now. We have got to bounce. But here's the teaching thing. Look at this. Do you see these candles? This is a 3-candle formation that we're talking about here. We do get a hammer. A hammer is anytime you have a little body with a lower shadow, 2 times or more that real body with a little to no upper shadow. So we do have a hammer down here. That hammer is part of a 3-candlestick pattern. And that is called an abandoned baby. This abandoned baby, a bullish abandoned baby, is very powerful. When you get them, they are highly, it's predicted to go in the way that you think it's going to go. This is how you know you have an abandoned baby. You have to have a down leg. Once you have the down leg, you have to have a gap down, and you have to have some candlestick down here, usually with a small body, okay? But the second candlestick has to gap up and then start to rally north. Here's the important part of this. The gap down and the gap up has to have 2 open windows. An open window means there's nothing overlapping between these 2 candlesticks, and then on the second window, nothing overlapping. So do you see my horizontal line? If that was a bullet or an arrow shooting across here, it doesn't touch any lines. It's an open window here, and nothing touches. So let's go to the diamonds. So do we have an abandoned baby here? The answer is yes. Why? Because it's a down leg and an up leg. We have a gap down, a small body, a gap up, and we have 2 open windows. See this? I mean, I could drive a Mack truck through that. Very, very good. NASDAQ, is this an abandoned baby? The answer is no. It still played out very bullishly, but we have 1 open window barely on the first one, but we have a closed window here, so it decreases the chances of this playing out to be really bullish. Russell's 2000, we did not. We just have a hammer, a nice hammer at a support level. Of course, we should get a bounce there, and we did. Financials, is this an abandoned baby? The answer is yes, it is. Down leg, up leg, gap down, gap up, and 2 open windows with a little body. Boom. So now you know what an abandoned baby is, and now you know how profitable you can be when you find them. These things are highly powerful. You can look at them on the upside. So you go up, gap down. This one does not give us 2 open windows, almost 2 open windows. Almost, but close enough to get this thing to really crash lower. You do not find abandoned babies very often. Here you drop down, you gap down. It's almost a 2. We don't have 2 open windows here, but it did rally up higher. Gap down and a gap up on the second or third candlestick. So anyway, there's things you can find these, okay? Gold. Do not look at GLD or silver for abandoned babies. Why? Because of all the gaps. It's too gappy. Because of that, the gaps are intrinsic with how this operates, and this will not give you true gaps. Okay. So if I go back to my 3 charts, I'm going to look at the monthlies. Okay, guys, this is the Spider monthly. If we break down below that trend line, woe to the markets. Our highs will have been put in right there. The Spider, that high that we put in on the week of January 3rd will be our high. Will that happen? Maybe. I'm going to, at the end, I'm wrapping up. I'm going to be sharing with you what I look for before a market crash. And I'm starting to see it now. I've lived through 3 of them. Not including the flash crashes, okay? I've been trading 24 years in the market this February. The diamonds are threatening to break that trend line right there. It broke it here. Hold on. Let me see if I need to tighten this line. Whoa, this is interesting. So we hit once, 2. Hold on a second. This, I want to make sure this matches. Boom, 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 boom. Okay, if it breaks below this, guys, I had to tighten this up a little bit, and we have a bearish divergence. Bearish divergence, doubled bearish divergence, rising wedge. Guys, this is bad news. The Qs broke the lower trend line. It's already broken. This is bad news for tech stocks. This is bad news for the markets. This bearish divergence is playing out right now. This could spell trouble. The 20-week moving average is the only thing acting as support. Again, like I said on the weekly chart, the only thing to save this is if we rally up next week and we start to base sideways for the next few weeks. That's the only thing that's going to save us right now. If we don't do that, this thing could get slippery and fast. Russell's 2000 monthly chart broke it. We already talked about it 2 months ago. Broke it last month. This is what happened this month. We're starting to drop. But you see this base we're talking about? That's the base we need to see in NASDAQ. That's the base we need to see on the S&P and Diamonds or Dow. That base going sideways. We're getting the base on the Russell's 2000. Will this base rally higher? Will this prove to be a flying high base that we will launch from? The jury is out on that. So we're watching the Russell's 2000 monthly chart very, very closely. But on the monthly chart all year long, this has been a choppy mess, guys. This has been a horrible year for trading anything. If you're trading anything outside of blue chips, okay? If you're trading anything outside of blue chips, guys, you could see this has been a very turbulent, hard year to make money in. Okay, just know that. If you're making money in the markets, kudos to you. Doing very good. Financials, up and away, but we have bearish divergences, guys. This could be short-lived. If the financials start to fall, we're in dire trouble. Gold, big symmetrical triangle on the daily or on the monthly, but we're hugging the lower. This is more bearish than it is bullish. Silver, we're down, more bullish than it is bearish because we have now pulled back. Look for this to rally higher. Now, gold could still rally higher. I just don't like this hugging the lower line. It should be at the upper line. And the thing that I want to show you here, if I go back to the weeklies on gold and silver, here's the weekly. We are toying with death on gold on this symmetrical triangle. We're at apex. Look for a major move to the downside. I like to look something that we call the death hook. If it drops down and rallies up, that would be good. Silver, it popped up, but we're showing weakness, guys. We're at major support. We're at support. This could break down. Gold and silver could be in a lot of trouble. I'm just letting you guys know. US dollar is pulling back on the weekly chart. VIX is at a major area of support with all these trend lines. It has pulled back. There's no fear out there in the markets, but this thing could get squirrely. Bitcoin has broken a major support line on the weekly chart. So we're getting some great price buying opportunities coming up. It's just not a buy time at this very moment. Ethereum could be at a buy time. We're at a major area of support. Will we find that support there? We need to look. But let me tell you what I look for in the markets. I hope this was educational. Give me a like. Likes they don't cost you a dime, and it costs you about 30 seconds of time to leave me a comment. I appreciate your comments. As you see, I love them. I put hearts on them. As soon as you do that, and I am alerted, I read them, put a heart, and I'll comment on some of them, especially if you have questions or whatnot. But I just want to let you guys know that I appreciate you. But here's what I look for. What I'm seeing now is bigger time frames, weeklies, monthlies. When they start breaking trend lines, bad news. Nothing happens until you can't break down until you break down across those trend lines. That's starting to happen right now at this moment. The other thing that I see, I've been trading almost 24 years in the markets next month. I lived through the 2000 crash. I lived through the technology crash in 2000, and then the financial crash 2008, and then after that the COVID crash here in 2020. So I've lived through those, and I know what to look for. I know I've got my fingers on the pulse of these market crashes now. And one thing that I'll share with you that will be easy for anybody to understand, okay? So if I have a relative, a grandparent asking me, anybody, a mom and dad asking me, how do I know when I should be looking to go to cash in the markets? I can't talk to them about trend lines and that sort of thing. Here is something anybody can learn from. This is something that anybody can do and watch for. Watch for this. When the markets break down and the Dow drops more than 1,000 points, it's a 1,200 point drop, a 1,300 point drop, 1,500 point drop, a monster drop, a drop so big that all the talking heads on all the major news stations are talking about this big drop. The very next day, you're going to see a monster run up. So you drop $1,200 today, and everyone's freaking out. Next day, we're up $800. You're like, woo, okay, that was scary, guys. And it might go up another $200 after that. But then you'll get another 1,500 point down day. Okay, you'll get this monster down day. Then after that, you'll get a 600 point up day. You will get these monster ups and downs at the top of a run, okay? So you'll get this big run, big volume will come in, you'll get these big ups and big downs. That will set the top. That's called capitulation. It happens on all of them. And that, except for COVID looked different than the two major market corrections that we saw in 2008. But I saw it in 2007. If you know my 2007 videos, you'll see that I was talking about it, saying, man, we got big problems coming here. Just like I'm saying now, guys, big problems. Warning, warning, warning. This could, what I just showed you could be very bad for the markets going into this year. And so, but when you see those things, the benefit you'll have is you'll be watching your 6 o'clock news, 6:30 news, and you'll be like, whoa, you had a 1,300 point down day today. They'll give all the reasons why. It doesn't matter. They always come up with a reason why the market's dropped. It's just smart money getting out. And usually it's, there'll be a catalyst of some sort that will get it started. But when that happens, you're going to be caught in that, right? If you go and look at your 401k or IRA, you're going to be like, whoa, it took a big hit in one day. It's going to be sizable, right? But the benefit you have is that's going to rally back in a day or two. In a day or two, you're going to get this monster retracement, okay? It's going to come back. That's the day to be looking to sell. Smart money will look to sell into that strength, and that's why you'll get another down day, and it's usually bigger than the initial one, okay? So when you get that, hopefully you'll be out by the second one, because you'll be like, whoa, we had a 1,000 point down day. D7 at Grok Trade talked about that, and and if I get a big bullish day tomorrow, I'm actually going to go to cash. I'm not saying get out of your 401ks or IRAs. I'm just saying move into cash. At least do that, or buy some government bonds, or do something like that. Save your money until the markets figure themselves out. But that could be setting in a market top. And a little more aggressive, look at getting into the SQQQ. It's an inverse ETF. You can just type in inverse ETFs and look for different instruments that you can get into. The VIX, there's a number of them you can get into that you can buy. They're a little more aggressive. You got to know what you're doing. Like I said, we do have education. We'll provide that for you, so you're trading with your eyes open. At least be doing, if you're going to invest in anything, first invest in yourself. I'm telling you, it's a much cheaper route. You're going to get a lot more value when you're trading than trying to trade yourself. And then after you take your big hits, then come and get educated. That's a tip that everybody should know. Okay, we've been in business 14 years, a long time. I'm just telling you, how many people have come to me and said, I wish we came to you earlier. If I had a nickel for every time, I'd have an island over in the Fiji somewhere. So anyway, so there you have it. That's what I'm looking at in the markets. I hope that was beneficial to you. Give me a like, and you can give me a dislike, but we don't see them anymore. Dislikes go into Never land. YouTube doesn't even show them. And also, the comments are very special to me. Any comments you have on the markets, if you think that we'll keep going up, I think that we have a chance. Again, we have to rally next week for us to go higher. So share this video, man. Let people know, people you care about, know and trust. Share this video, because it's something to be thinking about. And for those people into crypto, I've got a lot of crypto. I've got a lot of crypto in my retirement side of things. And my algorithm is trading a bunch of my money. So I've got a lot going on there. I love having an algorithm that does systematic trading for me. So it takes emotions out, and it just does it for me. It's like having a Tesla. For you guys that have Teslas, you understand. So the autonomy of driving, autonomy in finance is very, very beneficial and very helpful. So, man, if you made it, say you made it in the comments. Only you and I and the others that made it will understand what you mean by saying made it. So let me know you made it. You're crazy that you stayed on this long with me. So see you guys later. Bye.